Welcome, traders, to another Tick Mill trading update with me, Patrick Munnelly. Want to take a look at the S&P 500 using the emini futures contract and put together a trade plan for the session ahead. Before we jump into the technical side of things, on the macro front, we have PPI data out today. We also have the ECB rate decision, followed by jobless claims, and then followed by a press conference with Madame Lagarde. So we can expect to see a bit of volatility around these releases, starting in about 5 minutes with the rate release from the ECB, and then US data at the bottom of the hour. Looking at the technical side of things, obviously we had a very sharp reversal yesterday. You'll remember that I talked about that 54.20 area to act as potential support, and it did on the retest, and we are now teetering on putting in a weekly flip on the volume weighted average price to bullish. Obviously, we still have today's session and tomorrow's to go, so we'll see where that closes, but that could be a meaningful development. So keep an eye on that as we head into the close tomorrow. From a daily perspective, we are trading now outside of the weekly anticipated range, which is in those 55.40s, currently trading 55.70s. Key area for me is going to be the 78.6% retracement of last week's decline, which comes in around the 56.10, 56.15 area. Moving on to the intraday setup, you can see my positions up here on the left-hand side. I won't go through them one by one. You can review those yourselves, and my stops are identified as well. So from the weekly trade plan, we obviously traded into the support, took out the bull bear zone from below, and are now sitting at the initial resistance area. You can see the similarities in terms of the price action. I referenced this yesterday, and I'm still looking at it today, where we're currently trading. We retested on that initial decline from the July high, retested, broke high, and then saw some significant selling after a decent retracement. And so the setup looks very similar from a pattern perspective. I would suggest that we could see a test into this 5600, 5610 handle as key if we are going to immediately see some more pressure to the downside here. So moving into the intraday setup and my levels, I'm watching for any move now into 5600, 5615. Watching the bearish reversal patterns there as an opportunity to engage on the short side. You'll see I covered my short yesterday for about a 7% gain on that trade, and I have a long running from the 54.20s. 54.26 was my fill, and I've looked in, or I put in 100 points on that for securing about 5% on that. So, I mean, this month so far, where are we now? On the 12th, I've only had 3 trades. I had the short position. I had a long position, which was stopped out for 15 points, 0.75% loss on that. And like I said, I've got 100 running now, so 5. And the 6 or 11. So that's on 3 trades so far, and I've got about 10% secured in terms of these swing positions. It's the swing positions that I share here through my the P&L updates. Intraday trading is too difficult to give you meaningful data on that in terms of the sharing the entries and exits, etc. So I try to do that through these intraday levels. And like I say to you, or as I've said before, I'm using about, given the current volatility, 10 to 15 point stop. Once the trade is running 10 to 15 points in my favor, I'm moving my entry to break even and see if I can catch a run on those. So that's the intraday strategy to use around these intraday levels is my suggestion. Now, yesterday, for example, we got that pullback into the 54.20s, And so I took the shot as per the plan yesterday, and obviously that trade turned into a fantastic runner. So you only need to catch a few of these level trades, and if the move goes in your favor and allow the trade to run to really, basically do your P and L for a month. So keep that in mind when you're trading these, or if you're trading these. This is how I'm using them, and then you can manage your risk and the trades accordingly. So from the intraday, like I say, this 5600, 5615 is going to be key for me, and this is where I'm going to try and build another swing position on the short side if I get the setup there and get some confirmation on the intraday time frame. If we take out 55.44 on the downside, the next area of interest is going to be 56.28 to 56.18. Got this volume node here on the profile. That can be key as potential support for a move back up initially to retest the bull bear zone from below, and then if we hold above there, get acceptance, then we're same upside targets. From a range perspective, as we head into today's session, the range extremes for me are going to be 56.50 to 56.61 on the upside. Range extreme on the downside, 54.80 to 54.70. So again, I look to trade these range extreme trades are high probability, given that they correlate with a roughly 2 standard deviation move outside of what would be the norm for the session. So keep these levels in mind as well. They are useful for intraday trading, tactical trading, but again, they can turn into swing trades if we get runners from those levels. So that's a wrap for now. The update for tomorrow's session will be coming a bit earlier, as I'm going to be off the desk tomorrow afternoon. As always, traders, plan the trade, trade the plan. Most importantly, manage your risk. Until next time, thanks very much.